How's it going, everybody? This video, I want to take a look at some stocks, kind of break down some news-related stuff related to these companies. I'm kind of going to go through the stuff on my watch list as well as some investments that I have. I've been kind of slacking lately, not really looking up too much stuff. But yeah, Intel, big one right now. This reports earnings the 28th, so next Monday. Super nice. 1, 2, 3. So this will be the third quarter. They're paying their $3.65 dividend. Sorry, wow. Their 36.5 cent dividend each quarter. That'd be insane if they were. We're looking at weekly candles and stuff. Let's see. So the CHIPS Act actually has been coming out, or not coming out, but there's been more news on that. I kind of want to see if this says anything about it. City launches positive catalyst watch and XP on negative on Intel. Why are these companies so negative? And well, it's so surprising. So analyst Christopher Danley spent over 2 weeks meeting with clients across the country. He wanted to express thoughts on sentiment in stocks. He remains negative on semis, but believes the short-term rally could continue through August. A large collapse. Blah 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 blah. Why is he negative? He launched cheerful catalyst. Wait, what? He launched cheerful catalyst on NXP semiconductors. He's negative due to downside. Okay, so he's just short-term bouncing negative catalyst on Intel due to downsides and estimates for earnings. I mean, again, this is the thing I'm so confused about. The CEO mentioned that there's gonna be some downsides. There's gonna be some rough times. But the stock getting like cut in half more than that is just, it's fascinating. I think the upside potential on this is, I mean, it's not certain. It's definitely the probability that it could fail. The plan could fail. But I think, I don't know. To me, looking at everything, it seemed pretty promising. Again, I'm not getting my hopes up, but I'm just saying I'm putting my money where my mouth is. I think this company will do quite well in the next few years. Kind of happy these analysts and people are not liking it as much. I mean, obviously, I still want to do my due diligence and try to read the reports when I can, but yeah, I like this company where it stands. All the financials are lining up. Let's see, briefly see, where's AMD? I just saw that previously City-related neutral Intel and AMD betting on contraction in the PC market due to impact on both negatively. May marked the 5th consecutive month where notebook shipments are below expected. Again, people are so not nearsighted, but short term, the 5th month in a row where shipments are down. Okay. I mean, that's not the best, right? But it's also like 5 months in a row. Okay, I don't know. It's just, I like to look at things a little bit more broad than just 5 months. But I mean, again, people, that's how they get the clicks, they get people to watch. Intel reportedly looks to hike its processor prices after Taiwan semi. After what? Intel reportedly looks to hike its processor prices after Taiwan Semiconductor Company. Period. What? It could force PC vendors to opt for advanced purchases. Yeah. Let's see. Intel gets CNBC Fast Money mentions stock jumps 1.8%. Let's see what they said. ExxonMobil start to position. Jim, some of the start position, man, is a little late. That they should have been buying this stuff when it was like $40. Not when it's, a little bit more expensive, but I guess it's good to see Intel calls of the day. Intel final. I mean, this doesn't really show misinformation. What is this stock? NXP. Where'd it go? NXPI. NXPI. Is this like a new company they're trying to hype up or something? Let's see. I've never heard of this company before. Paying an $8.84 dividend, basically. What is this? This is a COVID. Wow, COVID is that far away. COVID's almost like 2 years ago. This company's been around since like 2010, so I guess it's 12 years old now, at least this thing. Where are they? How's AMD doing? Actually, just a quick glance at that. Oh, pretty big bounce. What is this? Like 75 to like a 17% move. So wait, the 3M. 1, 2, 3, dividend. 3M, I guess. I hope, not hope, but 3M's getting smoked. I actually bought a little bit more. It's down like 35%. The dividend right now is pretty high. Is it gonna tell me here? No, I can probably just look it up, but it's like 4.5% roughly. Let's see, this was as of July 13th. Let's see, where did I? Oh, Deutsche Bank securities just 3M price target from 146 to from 164. I mean, 164 is still super high, but I think 146 is actually pretty reasonable. The prices that I played hours 140 and below is what I would be buying. 3M earplug. First stems from self-made legal battle. First stems. To be honest, I don't really feel like reading that. Why companies say why companies just can't win is $1 away. Morgan Stanley maintains underweight at 3M lowers target to 126. Wow, they're looking to buy this. Morgan Stanley lowering this to 126. They're looking to buy this, so I mean it's quite convenient. Was it MW lowers from 170 to 130? Like, again, you gotta play the game. The fact that their price targets were at 170 is just fascinating. Like, where'd they pull these numbers from? But yeah, again, this channel is, I think, a good buy zone. I mean, again, that's like a 20-point swing or 20% swing, but like, I don't know, pretty solid company. Just they got a lot of debt. Got a lot of debt. So Verizon actually kind of got smoked today. They had earnings, right? Did they? 22 before market. Why are they getting smoked immediately? AT&T stock. Oh, the AT&T report. Stock price. Let's see. AT&T is shedding value on Thursday after a big miss on second quarter free cash flow and lowered guidance for the remainder of the year. The overshooting. So they lowered guidance, so that's kind of anticipating Verizon's probably gonna lower guidance too. I mean, not obviously, but same sector. So AT&T's current dividend commitment is around $8 billion annually or $2 billion a quarter. The company generated $1.4 billion free cash flow. That's so bad in the second quarter. The short of the $4.7 billion the analysts were expecting. What? They missed by the $3.3 billion in free cash flow. It also means that AT&T's free cash flow for the quarter didn't cover its annual dividend commitment in the period, not with income of it. I mean, yeah, sure, it is one quarter, right? Like, again, I'm not reading the fine print, but regardless, like, you know, the AT&T's got, like, I mean, Verizon does too, but a lot of debt. Like, it's just not a good scenario, especially if they can't even pay their dividend. Or like even a percentage of that. The company continues to expect $20 billion in free cash flow in 2023 for a healthier dividend payout of 40%. Sure, like maybe they do, but didn't they just cut their dividend too? They didn't cut it. Like, I don't know. Like this headline too. AT&T stock is falling, but its dividend yield is taking off. I mean, obviously, if a stock price falls, the dividend yield is going to take off or like increase because that's just how it works. I don't like the dividend with this company. It's just they way too much debt. I mean, again, maybe I'm being hypocritical because I own Verizon, but at least yeah, I think Verizon's just a little bit better company. Speaking of dividends, Walgreens increased their dividend to 48 cents a share. However, that was only like it was a 0.5% increase right here. So I'm actually not annoyed at that, but I'm a little surprised, to be honest. I thought they would at least increase it a little bit more. They clearly have the free cash flow, they can pay it. I think they're just concerned, which I mean, sure, but at the same time, like, I don't know. I think a little bit more would have been nice. But it is what it is. Let's see if they mention anything else about the dividend. Walgreens, blah, 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 blah. Nope. Anything here? No. I'm trying to see if there's anything specific about the dividend that doesn't just say they increased it. Anyway, I mean, we did the numbers. They can increase. I mean, I knew they were going to increase it, but I thought it would be not a fraction of a percent. I thought it would be like maybe 2%, like minimum, like bare minimum. Going back to dividends to Exxon, 1, 2, 3. They should be announcing their fourth quarter 88-cent, or their fourth quarter 88-cent dividend. ExxonMobil whales spotted. This is as of 7. What date is it? 7/19. So 2 days ago. Bullish, bearish. So we have a $1 million trade price in the bearish direction. I mean, we don't know the dates though. I don't know. These things are kind of weird too. Anyway, what was I talking about? I wonder if Exxon's gonna increase the dividend because yeah, they will. I don't know how much, obviously, but if I had to expect something, I mean, they're definitely gonna increase it at least a penny. So that'd be about 1.3%, something like that. I think they go for like maybe 3%, 4%. I mean, they made a lot of money this last year. They were able to pay off a decent amount of debt too. I mean, what else are they gonna do? Are they buying back shares? I mean, maybe if they did buy back shares, I feel like they would just increase the dividend even some more. Yeah. I got Logitech too. I ended up buying that. Average price $51. I think we talked about this though. Logitech ranked among the top 1% of sustainable companies. Let's see. It's been announced that it's been awarded platinum rating. One of the largest. Blah blah blah. I mean, I guess cool. Let's see what else we got. Logitech and creators. Maintains a buy. So Citigroup maintains a buy. Price target to $80. I mean, again, we don't know the time frame, but I think my price target is, I think, $70 to $80 in like 3 or 4 years from now. Being relatively conservative, though, I mean. Let's see what else we got. I mean, this is getting a little bit older. Citigroup, wait. Citigroup. What? Citigroup maintains buy on Logitech International while lowers price target to $80. The same day, Citigroup adjusts Logitech's price target to 80 from 95. So they had a $95 price target. Jeez. I am though curious what these I was gonna say time horizons are. I did end up buying some Google. 112, about 113. Oh, they report earnings soon, next week. Or, yeah, next week. Let's see. I'm just scanning. Just price target to 135. So Deutsche Bank's got a 135. And that would be still pretty big. I think for me, I guess right now, $100 if that were buying it. The 20 for, we had a 20 for 1 split, about $100 where I want it. I mean, again, I don't know where it's going, but Lyft lays off about 60 employees, folds its car rentals for riders. I mean, 60 people, is that really that many employees? Roads to scaling first-party rentals is longer and challenging with significant uncertainty. I mean, Lyft, bro. Lyft and Uber, I just don't think these are businesses that will survive. I mean, I'm not even saying that from a stock price point of view, but I mean, this thing's down mad hard, but they just can't make money. I don't see how this company makes money. Like, ever. Unless if you, like, hoard every single person to, like, the cities, and then maybe, but I just don't see it happening. Same thing Uber. Like, these are terrible stocks, too. Like, just from a stock point of view, just not something I want to own. Look at this, was it BTIG adjust Uber price from to 35 from 55 reiterates buy rating. Why would you drop the price from your predicted price from 55 to 35, which is a 55% decrease, and reiterate your buy rating? Like, what kind of mumbo jumbo is that? Like, again, the games that they play, I just don't understand. Let's see what else. Uber penalized millions to settle lawsuit for overcharging people with disabilities. Uber to pay millions. Same thing. Yeah. Just not the type of business that I really want to own. I mean, again, if you want to do it, do what you gotta do, but let's see Disney. What Disney is spicy with, like, chaos happening. Here's everything to come in Disney Plus in August 2022. It's a big month for Marvel's She-Hulk, the Star Wars prequel, and/or the streaming of the debut of Lightyear. Didn't Lightyear do really bad? August a month, a big name for Disney. Blah 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 blah. Oops. Animated stories prequel first hitting Disney Plus a month and a half after the original image of the Pixar movie disappointed the box office. Disney executives are surely hoping it will be more of a hit for kids watching from home. Sure. A week later, it comes out of season kid show Bluey. Spoiler for the adults. Okay, I don't really care enough. So you're selling releases and stuff. Wow, Disney falling below 100 but bouncing. I mean, that is not surprising though, because why did I put that line here? Yeah, that's a low support. So basically, Disney has not had like a good. I mean, not a good month. I'll say that. And 50% drop. I mean, this is actually kind of a buy zone. I just don't really. I mean, I liked some of the products. I like Star Wars. I like the parks and stuff. But I mean, I'm not trying to get political, but I'm not trying to support a company that gets too political. Again, your business. But I mean, again, that's just my point of view. What is Take-Two doing? You got anything going on, Take-Two? Come on, go back down to $100. 3 video game stocks that could take off for shelter and recession. Actually, Sony, EA. I'm actually really curious, really quick. I keep getting sidetracked. Activision, what are you doing? After Microsoft bought this, like, I guess nothing really happened, right? What is this market chatter? NetEase to release Diablo Immortal in China after a month-long delay. Do we care enough? I don't think so. What's going on in the energy sector? Man, I haven't blinked in a while. I think gold and silver are still getting smoked. Quite sad. I might actually start buying some more physical silver. Then I could just buy Pokemon cards. Like, you know, I'd rather buy Pokemon. Let's see. I'm gonna just scan in the watch list, seeing if anything pops up. JP Morgan was getting spicy at $100. I would have started getting interested, but it didn't quite get there. JP Morgan Chase states retail demand is improving for crypto. What happened in the report released July 22nd? JP Morgan claimed to see retail demand improve for crypto sector. The bank further stated that the intense phase of deleveraging caused by the crushing price of deleveraging across major crypto lenders is coming to an end. The bank further highlighted that the recent relief rally experienced by markets is not a result of futures of institutions. Thus, JP Morgan's believes retail demand to be rising. I mean, do they know the people that buy crypto, though? I feel like, not the people that buy crypto, but I'm trying to say is like, if people see crypto going up, that's kind of like hypey. They get into it. I think, because crypto is a hard asset to value, right? Like, it's hard to know the same thing like gold, how do you like value it, right? But we're back at like 20K, wow, that's a huge drop. I mean, it's above 20K, but like that's probably a support area. But I think 20K actually, if it doesn't hold at 20K, it probably goes to 15K. Like, I just feel like it has to hit some major support area. and a psychological support, but it's just so hard to value. But I mean, same thing, gold and silver, hard to value. I'm surprised the dollar took off this hard, but, you know, if every currency around the world is getting pooped on, I mean, I guess the US dollar is the one that's less poopy. So Snap-on actually had earnings. Actually, was this today? I didn't read it. It is today. Oh man, nice. They're up a little bit, like 2%. Can we get like a quick highlight? There's the transcript above analyst expectations. EPS improved to $4.26 compared to $3 in the following year. Yep. An increase of 8.4. I don't care about those numbers. Yeah, I mean, regardless, though, yeah, this company, is it worth overpaying? Probably. I mean, okay, no company is technically worth overpaying, but at some point, you know, I've got to get a little bit like, okay, I want this company. The fact that they beat earnings too, I'm nowhere near, oh man, it's a 210. I'm at 203. But I was hoping to go to 170 now with the positive earnings. Earned $4.27. So I mean, real quick, we just do, I mean, we can look this up. Let's do $4.27 plus $4 plus 3.57 plus 3.76. Gonna give us EPS for the year, and then price divided by 15.6. So 210 divided by 15.6 roughly is gonna give us a PE of about 13.5. I mean, still pretty cheap, but again, they're not expected to grow that much, but also that's the analyst expectations on that. So, I mean, if you, and I think we talked about in a different video, but this company has got no debt, or very little debt, great balance sheet, great working capital, buying back shares like every single quarter, dividends increasing like 13 to 15% every year for at least 3 to 4 years consistently. They can easily increase the dividend too because of the amount of money they generate from in free cash flow perspective. Everything looks solid, just the valuation might seem a little high because analysts are not expecting this company to grow a lot. This company probably will not grow a lot. So a 13 PE might be a little bit high. But the fact again that they're buying back the shares is going to further increase the EPS even further. And they're increasing the dividend pretty rapidly too, so that's even going to just bolster the stock. The choices, man. I think I gotta buy more. This is like everything, almost everything I want in a company, but here, Series 220 actually is like a hard cap. Like people are like, nah, we don't want this. Like look at all this. These are weekly candles again. So actually a year ago, this is a year ago, June, July last year, it hasn't moved at all. So it did get a huge bump up a little too high up, but from a technical perspective, at least we're on this. Yeah, I see the xylophone pattern. I think it's got to go down. I hate trading this like this because I think it's so for 170. Let's say we get it for 170. We said 15.6 about. It'd be at 10, 11 PE down here. That would be that to me. That would be like. Again, not a buy recommendation, but I'm just buying it because that's just so not so cheap, but it's cheap enough where I'm like, there's like no downside, but there's no downside for me. It's just, do we get there? Like the market likes this stock right now. Obviously, you can see it hasn't really moved this past year. So I mean, this stock was just let's take today's price to like the all-time high, or today's price to, yeah, a year ago. It's down. Sorry, what was that? 17%. Go to the SPY, the whole market. Today's price down 15. I guess it is kind of mirroring the market a little bit. I thought it'd be down actually a lot further, or the SPY would. But yeah, I see that pattern. I'm just like, this probably goes down from a technical point of view, but I like the financials, so I mean, so we got one more quarter, and then they're going to increase the dividend, so yeah, I guess I got 4 months, about 4 months to increase this position probably a little bit further before, I mean, again, they're going to, the dividend right now is like 3%, but I don't know, man, just looks so spicy. Again, I'm not trying to overhype this stock, but it just fits so many of the check marks that I'm looking for in a company. And just the valuation and the technicals are looking iffy. Speaking of that, Kohl's got absolutely like milli rocked. The dividend right now is crazy. They're paying $2 a year on $30. I wish I could do some quick math. What's was it 200 divided by 30 or something? 30 divided by 200. Anyway, we'll just do 2 divided by 30. 6.67% yield is super high, but they got problems, and I already have problem companies. Not problem companies, but like Foot Locker in my portfolio. That's my my retail kind of like high yield sketch stock sort of. I accept that. But yeah, anyway, I think we deviated from the news stuff, but into just dividends. Let's see if they're talking anything about the final trade. Someone actually said Foot Locker. Interesting. Foot Locker is selling one of its businesses. The stock is flat. What did they sell? Stock is flat on Monday after Athletic Gear Retail has to sell its high school and college product suppliers to a supporting goods distributor. Terms are not disclosed. So its agreement to sell its team sales business to BASN Sports, a division of Varsity Brands. The stock, blah, 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 blah. We announced the action is to sharpen our company's focus on a more customer business and strengthen banner differentiation. I mean, that was their goal, at least from, I think, 2 or 3 earnings reports ago. That same thing with like Nike. I think they want to start building their own brand and not just kind of, I don't know, wholesaling. Wholesaling was the word I'm looking for. Like, just buying something else and selling it. They kind of want to make their own stuff, I guess. That's what it kind of seems. Or like, yeah, not just resell all their products. We'll see. Kind of risky, but we got some shares. And I did actually at $25 for 2 weeks. That was my buy price, but I did not. Actually, did I pick up any? I picked up like a couple shares. I didn't do anything major, but yeah. Wow, Simon Property really fell too. Down like 40%. Huh. Why is this dropping so much? Deutsche Bank adjusted from 173 to 129. That's a huge drop. Walking away from Twitter. Oh yeah, the Twitter. What 4 analysts have to say? What is this range? Someone says 100, someone says 160. That's a 60% difference. Like 90 days. Okay. Okay. I don't know. Anyway, though, what's it? Next week we gotta do maybe a portfolio update because Intel reports I'm down still a lot in this company. We're at 48, and down like 15% about. I'm averaging down. Obviously, I was at 55? I don't think it was. Maybe it was 55. Yeah, this thing just kept getting dropped. I mean, I wish I bought down here, but like, you don't know. I like the stock up here. I liked it down here. I mean, it's whatever. It is what it is, right? Anyway, though, hope you enjoyed the video. Thanks for watching. Let me know some of the stuff below.